Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on key sectors and stocks that we should be focusing for the day and the next few sessions. Frontline indices opened with a gap up to register a new all-time high. Buying support was visible on dips in Nifty with the likes of Reliance, IT stocks and L&T displaying strong momentum. Bank Nifty relatively underperformed if we see and traded sideways and witnessed a consolidation for the entire session, closing 0.4% negative in comparison to Nifty closing 0.4% higher. Coming to the macro factors, the dollar index currently at 103.95 once again attempted to rebound above its 20-day EMA, its first since early November. However, what's more positive is the longer term yields, that is the US 10-year and the US 30-year yields are still in a steep downtrend, with the US 10-year yield now trading below 4.17. Also, Brent crude oil remains weak, currently quoting $77, which is a big positive for an oil importing economy like India. The current trend in Brent crude suggests that it could further dip towards the levels of $70 a barrel. Overall, the global factors are lining in favor of Indian equity markets, with slight caution warranted on account of a rebound in the dollar index. Coming to the global markets, along the expected line, the S&P 500 is consolidating near its short-term resistance zone of 4,560 4,600. Once it sustains above this zone, it could head towards the levels of 4,710 or 4,740 on the upside. Coming to the index levels, that is, for the second day in a row, despite minor profit booking in the first half, Nifty managed to maintain its position above the previous day's low and even achieved a new all-time high towards the close of the day. The reason for the rebound from the lower levels despite Bank Nifty underperforming today was the support provided from the likes of Reliance, TCS, Infosys, ITC and L&T. If we see in the futures segment, Nifty witnessed a gain of 0.47% with the open interest rising by 8%, implying continuation of long built up in the index. However, if we see, the advanced decline ratio has declined from 90 to 68%, while the index gained 0.4%. This indicates that fewer stocks participated in yesterday's rally compared to the day before. This could be a sign of caution on the long side, but not necessarily a shorting signal. With India VIX up to levels of 13.75 and the RSI indicator sustaining above 83-84 levels is indicating overbought nature of the index, implying a possibility of the index consolidating in the next few sessions, especially with the weekly expiry today and the RBI policy outcome scheduled tomorrow. So going forward till 20,800, 20,850 holds, that is the current support, the index can extend its rally towards 161.8 Fibonacci extension zone of the levels of 21,040, 21,077. This is derived from the Fibonacci sequence applied to the move seen from 15 September to 26th October. On the downside, for the day below the levels of 20,800, index can retest the support levels placed at 20,740, 20,700 levels. Coming to the OI data, significant call build-up is witnessed in 21,000 strike and 21,100 strike, while on the put front it is mainly seen in 20,900, 20,800 strikes. Overall range for the day could be 20,780 on the downside and 21,077 on the upside. Coming to Bank Nifty lost 0.38% yesterday, displaying a price rejection at the region of the previous day's high, closer towards the levels of 47,250. On the daily chart, Wednesday's candle engulfed the small body candle created on Tuesday, which could signal a potential change in market sentiment towards consolidation in the next few sessions. On the futures front, that is for Bank Nifty, the index lost 0.53% with the open interest 2 reducing by 6.87%, implying a partial unwinding of the long positions at higher levels. With the medium-term trend continuing to remain bullish, the immediate support for Bank Nifty is likely to the zone of 46,550, 46,500 levels, while the immediate resistance is placed at 47,250, 47,230. Above the levels of 47,250, index could continue its current uptrend towards the levels of 47,700, 48,000 levels. while on the downside, in case 46,500 breaks, the index can retest its next support placed at 46,220, 46,080 levels. If we see the OI build up, that is for next week's expiry, weekly expiry, currently if you see 46,700, 46,500, 46,000 puts witnessed OI built up, while on the call side it was mainly seen in 47,000 and 47,500 calls. Coming towards the stocks and sectors in momentum, in trade yesterday it was Nifty Media which was the best performing sector for the day, up 2.11%. The lion's share of the buying momentum was seen in TV18 broadcast and Network 18. IT sector stocks also witnessed good traction with the likes of Wipro, LTIM, TCS, Infosys and LTTS witnessing good traction on the upside. The fertilizer counters such as FACT, Chambal, Coromandel, Deepak Fertilizers, GNFC also witnessed bullish momentum with heavy volumes. Good momentum build-up was witnessed in metal counters. The trend has been positive from the past few sessions with the likes of Jindal Steel, SAIL, Hindalco and JSW witnessing good traction. From the broader markets, if we see Godrej Properties, Oberoi Realty, Tata Power, Tata Motors, Bajaj Finserv, LT, IRCTC, Petronet, NHPC, Cochin Shipyard, Bank India witnessed traction on the upside. Coming to the FI DI data, in the cash segment, FIs were sellers to the tune of 80 crores while DIs bought to the tune of 1370 crores. FI's long short ratio for index futures has improved to 53% as they squared off 14,600 index future net short and added about 12,000 contracts on the long side. On the stock futures front, FIs have sold to the tune of 5,500 contracts, while on the options front, FIs added 2 lakh call contracts as well as sold 1,68,000 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.